The market's final test isn't about handling losses. It's about handling the silence when you're finally doing it right. There are clear, predictable stages that almost every trader goes through. First, you don't know what you're doing and you lose money. Then you start learning and you still lose money, but now you understand why. Then you develop a system and you break even, maybe slightly profitable. And then comes the final stage, the one that breaks most traders right before they make it. The stage where trading becomes boring. Not boring because you've lost interest. Boring because you've finally removed the chaos. Boring because your system works and your job is just to execute it. Boring because the emotional roller coaster has flatlined into consistent, mechanical profitability. And that boredom? That's the final boss. That's the last test between you and actually making it as a trader. Because when trading becomes boring, almost everyone sabotages it. They blow up the very thing that was finally working. They destroy months or years of progress because they can't tolerate the absence of stimulation. Let me explain something that sounds completely backwards. If your trading feels boring, it usually means you're finally doing it right. And that's precisely why you're about to ruin it. Think about when you first started trading. Every position was an event. You'd enter a trade and your heart would race. You'd watch every candle like it was a championship game in overtime. When you won, the dopamine hit was incredible. When you lost, the pain was visceral. You felt alive. You felt engaged. You felt like you were doing something important. That was your brain getting exactly what it craved, high-intensity emotional stimulation wrapped in the promise of money. Every trade was a story. Every day was different. The volatility wasn't just in the market, it was in your emotional state. And honestly, some part of you loved it. Now fast forward. You've put in the work. You've developed a real edge. You've back-tested, forward-tested, and you're finally executing with discipline. Your win rate is solid. Your risk-reward is dialed in. You're actually making money consistently. And something feels wrong. The rush is gone. The excitement has evaporated. You sit down to trade, and it feels like your data entering spreadsheets. You follow your rules, you hit your targets, you manage your stops, and the whole thing feels empty, mechanical, boring. And here's where it gets dangerous. Your brain doesn't understand profitability. It understands stimulation. And right now, even though your account is growing, your brain is screaming at you that something's wrong because the emotional intensity has flatlined. You're making more money than ever, but it feels like less because the feeling is gone. This is the final stage. This is the final boss. This is where most traders fail, and they don't even realize they're being tested. Because you're not failing in the traditional sense, you're not losing trades, you're not breaking rules, you're not making rookie mistakes. You're succeeding, and that success feels so underwhelming that your brain wants to sabotage it. Because what happens next is predictable. You start looking for that feeling again. Not consciously. You're not sitting there thinking, I miss losing money. But unconsciously, your brain starts creating problems to solve, drama to engage with, intensity to feel. You start taking trades that are almost setups. Like, the structure is close enough, right? The trend is kind of there. The risk-reward is a bit compressed, but it's not terrible. You tell yourself you're being flexible, adapting to market conditions. But really? You're just bored, and your brain is trying to make trading interesting again. Or maybe you keep your strategy intact, but you start increasing your position size. Not based on your rules, based on the fact that winning with proper position sizing doesn't feel like winning anymore. The gains feel too small, too slow, too boring. So you juice it up a bit, just to feel something, just to make it matter again. Or perhaps you start monitoring everything obsessively. You're checking your positions every 5 minutes, even though your strategy is designed for 4-hour time frames. You're watching unrealized P&L tick up and down, refreshing your brokerage app, checking your phone during dinner. Not because you need to, because sitting with the boredom of letting your edge play out is unbearable. This is the pattern, and it's vicious because it disguises itself as reasonable trading behavior. You're not blowing up your account. You're staying active in the market. You're not revenge trading. You're taking advantage of opportunities. You're not gambling. You're being aggressive when you see conviction. The words sound professional, but the underlying driver is the same. You can't sit still in the silence of profitable trading. And here's what makes this so insidious. Your brain has spent your entire life learning that boredom is a problem to solve. When school was boring, you disrupted class or daydreamed or passed notes. When your job is boring, you scroll social media or chat with coworkers or find ways to make it interesting. Boredom has always been a signal that something needs to change. But in trading, boredom is the reward. Boredom means you've removed the chaos. Boredom means you've eliminated the unnecessary emotional volatility. Boredom means variance is shrinking and edge is expressing itself. Boredom is the environment where profits compound. Let me say that again because it's crucial. Boredom is not a bug in your trading. It's the feature. It's what success looks like. It's the final stage before crossing into sustained profitability. Think about every professional in every field who's truly elite. The Olympic swimmer doing the same stroke drills for the 10,000th time. The surgeon performing the same procedure they've done hundreds of times before. The pilot running through the identical pre-flight checklist. None of it is exciting. All of it is essential. The boredom is proof they've mastered the fundamentals so completely that execution is automatic. Trading is exactly the same. When your process becomes boring, it means you've internalized it. It means you're no longer fighting yourself. It means the system is working and your job is simply to not interfere with it. But your brain doesn't see it that way. Your brain sees low emotion and assumes low progress. It sees calm and interprets stagnation. It experiences boredom and screams, "Do something." And that's the test. The final boss isn't a market crash. It's not a losing streak. It's not even a moment of fear or greed. The final boss is sitting in your chair, watching your account slowly compound, and resisting the urge to make it interesting. Because here's what happens when you fail this test. You strategy hop. You'll have a system that's working, that's literally making you money, and you'll abandon it because it's not exciting enough. You'll see someone on Twitter posting about a new indicator or a new approach or a new market, and you'll think, maybe that's better. Not because your system failed, because your system succeeded so consistently that it became predictable, and predictable feels boring. This is why you see traders constantly changing strategies right after they start working. They're not changing because of losses. They're changing because of wins that don't feel like wins anymore. The strategy produces results, but it doesn't produce the feeling, so they convince themselves there must be something better out there. Something more engaging. Something that makes them feel like a trader again instead of someone pressing buttons according to a checklist. The market doesn't beat them. The losing doesn't beat them. The boredom beats them. Right at the final stage. Right before they would have crossed over into consistent profitability. So what's the answer? How do you win against this final boss? First, you recognize it. You understand that boredom is not a warning sign. It's a success metric. When trading starts feeling routine, when you're executing your plan without emotional spikes, when you're not getting that adrenaline rush from entries and exits, that's not a problem. That's the goal. That's what professional trading actually looks like. That's the final stage before everything clicks. You have to rewire how your brain interprets boredom. Instead of "this is boring, something's wrong," you need to train yourself to think "this is boring, I'm in the final stage, I'm almost there." Second, you protect the boredom. You guard it. When you feel that itch to make things interesting, you recognize it for what it is, self-sabotage wearing a disguise. Your brain trying to recreate the chaos that kept you unprofitable. When you catch yourself thinking about taking a marginal setup just to be active, you pause and ask, am I doing this because my system says to, or because I'm bored? When you think about increasing your risk to make the trade feel more meaningful, you ask, is this position sizing based on my rules or on my need for stimulation? When you consider switching strategies after a calm, profitable period, you ask, is this system actually broken? Or am I just bored with consistency? Most of the time, the honest answer will make you close the platform and walk away. Third, you find stimulation elsewhere. And this is important. You're a human being. You need engagement, novelty, excitement. That's not going to disappear just because you became a disciplined trader. But trading can't be the source of that anymore. Trading needs to be boring. So you get your stimulation somewhere else. Maybe it's a hobby that's genuinely engaging. Maybe it's a physical challenge. Maybe it's a creative project. Maybe it's relationships and experiences outside of the markets. Whatever it is, you need something in your life that satisfies that need for intensity so you're not asking your trading to provide it. Because when you ask trading to be exciting, trading gets expensive. Every time you try to make it interesting, you pay for it. Not always immediately, but eventually. The market charges you for entertainment, and the bill comes due. Fourth, you reframe what progress looks like. You stop measuring your development as a trader by how you feel and start measuring it by results plus process. A day where you took 0 trades because there were 0 valid setups is a perfect day. A week where you made 2% following your rules exactly is a better week than making 8% while breaking them. A month where nothing exciting happened, but your equity curve trended up is a fantastic month. You celebrate the boring wins. You recognize that the absence of drama is the presence of professionalism. You understand that the less you feel, the more you're probably making. Here's the hard truth that nobody wants to hear. If you need trading to be exciting, you will never be consistently profitable. The two are fundamentally incompatible. Excitement comes from uncertainty and emotion. Profitability comes from consistency and process. You can have one or the other, but you can't have both. And look, I get it. I understand why this is hard. You probably got into trading for the excitement, the freedom, the potential, the action, the feeling of being in the arena. You didn't sign up to be bored. You signed up to feel alive. But what you actually signed up for, whether you knew it or not, was the challenge of mastering yourself. And the final stage of that mastery is learning to be bored without reacting. Learning to sit in the silence of consistency without creating chaos just to feel something. Think about what happens when you finally beat this boss. When you can sit through the boring periods without self-sabotage. When you can execute your edge mechanically, day after day, week after week, without needing it to be thrilling. Your account grows, not in explosive bursts that feel incredible, in steady increments that feel like nothing. And that nothing compounds. That nothing turns into something significant. That nothing becomes life-changing over time. You stop giving back your gains. You stop cycling through strategies. You stop starting over. Your equity curve becomes what it's supposed to be, a long, boring, beautiful upward slope. Every profitable trader you've ever heard of has had to go through this final stage. Every single one. The ones who made it are the ones who learned to tolerate the boredom. The ones who didn't are the ones who kept searching for the excitement until they had nothing left to search with. So where are you in this journey? Are you still in the early stages where every trade is an event and you're riding the emotional roller coaster? If so, understand what's coming because the rush won't last. Or have you reached the final stage where trading is starting to feel routine and you're getting uncomfortable with that? If so, you're at the exact crossroads where most traders fail. You're right there, right at the finish line. Don't turn back now. This is your moment. This is where you decide if you're going to be profitable or just perpetually interesting. This is where you choose between the feeling and the result. Let's talk about the specific ways boredom tries to sabotage you in this final stage. Because if you can spot these patterns, you could defend against them. The first sabotage behavior is taking marginal setups just to be active. You know this one. Your system has clear entry criteria. Maybe it's a specific price action pattern plus confirmation plus volume plus trend alignment. All of those things need to line up. But you're sitting there and the market's been quiet for 2 days and you see something that has 3 out of 4 criteria. Close enough, right? No, that's boredom talking. That's your brain trying to create engagement because sitting and waiting doesn't feel productive. But waiting is productive when there's nothing to do. Every time you take a marginal setup because you're bored, you're diluting your edge. You're adding noise to your system. You're training yourself that the rules are negotiable when they're not. The second sabotage behavior is increasing risk to feel something. This one's sneaky because it can look like confidence. You've had a good run. Your system's working. So you bump your risk from 1% to 2% per trade. Then maybe to 3% on the ones where you're really confident. But here's the thing. Your edge doesn't change based on your confidence. Your edge is statistical. It plays out over hundreds of trades. When you increase your risk because wins don't feel meaningful anymore, you're not being aggressive. You're medicating boredom with leverage, and that's how accounts die. The third sabotage behavior is strategy hopping after a calm, profitable period. You've been swing trading for 6 months. It's working. You're up consistently. Then you see someone talking about day trading or option strategies or crypto scalping, and suddenly your swing trading feels old and slow. You start thinking about how much more you could make if you were more active. But you were a real trader. You're a real trader. Making consistent money with a boring swing trading system is exceptional. The problem isn't your strategy. It's that your strategy stopped providing emotional stimulation, and your brain interpreted that as a problem. So you switch. You start over. You reset your learning curve. And usually you give back most of those gains while you figure out the new approach. You were in the final stage. You were right there, and you walked away from it. The fourth sabotage behavior is over-monitoring price and P&L. You're in a position. Your stop is set. Your target is set. Your system says to check it at the end of the day, but you're checking it every 20 minutes. You're watching the unrealized P&L fluctuate. And what does that do? It reintroduces emotional volatility into a process you'd successfully made mechanical. Every time you check, you're creating a little hit of engagement. And eventually, one of those checks will catch you at a moment where you're frustrated or excited enough to override your plan. You'll close a winner early because you got scared watching it retrace. You'll exit a loser before your stop because watching it hurt too much. Over-monitoring is your brain's way of staying engaged with something that should be automated. And every bit of engagement you add is an opportunity to sabotage your own edge. Now, here's the reframe that actually fixes this. The reframe that changes everything. Boredom is not a problem to solve. It's a signal to protect. When trading becomes boring, your brain is telling you that variance is shrinking. That means your outcomes are becoming more predictable. That means your edge is expressing itself with less noise. That's exactly what you want. The boredom is proof that you've removed the random elements, the emotional interference, the chaos that prevents consistency. And what comes with that? Responsibility. When your system is working and trading is boring, you become responsible for not messing it up. That's uncomfortable because as long as trading was exciting and chaotic, you could always blame the market, the volatility, the circumstances. But when it's boring and mechanical and working, there's only one person who can ruin it. You. That responsibility is heavy. It's why some part of you wants to sabotage it. Because if you blow it up by taking marginal setups or over-leveraging or strategy hopping, you can tell yourself the system didn't work or the market changed. But if you just execute your boring plan and it works, then you have to admit you were capable of this all along. You have to accept that the only thing standing between you and consistent profitability was your need for stimulation. That's an uncomfortable truth, but it's also a liberating one. Because it means you control this. You control whether you beat the final boss or not. The market isn't the test anymore. You are. So let's get practical. What does protecting the boredom actually look like on a day-to-day basis in this final stage? It means you build structure around your trading that removes decision-making. You don't sit in front of charts all day waiting for something to happen. You check your setups at scheduled times, maybe twice a day, maybe once a day, depending on your time frame. If there's a setup, you execute it. If there's not, you close the platform and do something else. No scrolling, no hunting, no just checking. It means you track your trades in a journal, but you track the right things. Not just results, but adherence to process. Did you take only valid setups today? Did you follow your risk rules exactly? Did you check the market outside your scheduled times? The goal is perfection in execution, not perfection in outcomes. It means you deliberately cultivate interests outside of trading. This isn't optional. If trading is your only source of stimulation, you will sabotage it to keep it interesting. Your brain needs stimulation. Give it stimulation somewhere that doesn't cost you money. It means you regularly remind yourself what the alternative looks like. Remember what it felt like to be on that emotional roller coaster? Remember checking your account with dread? Remember the cycle of hope and disappointment? That excitement came with a price. The boredom you're feeling now, that's what you paid to escape that cycle. Protect it. And it means you develop mantras or mental cues for when it shows up. When you feel that urge to take a marginal setup, you have a phrase ready. Boredom is the signal. I'm in the final stage. When you think about increasing your risk, you remember the edge doesn't change with my emotions. When you consider strategy hopping, you ask, am I switching because this doesn't work or because it doesn't feel like enough? These aren't affirmations. They're pattern interrupts. They break the unconscious drift towards sabotage and force you to make a conscious choice. Here's something else. The boredom gets easier, not because you start enjoying it, but because you start trusting it. In the beginning, boring trading feels wrong because you don't trust that it's working. You need constant feedback, constant confirmation, constant stimulation to believe you're on the right path. But after months of boring execution producing consistent results, something shifts. You start to trust the process. You start to trust yourself. The boredom stops feeling like stagnation and starts feeling like stability. You stop needing to check constantly because you believe the system will do what it's supposed to do. That trust is earned through repetition, through showing up day after day, following your boring plan, watching it work. You can't think your way into trusting the boredom. You have to live your way into it. Now let's talk about something that makes this even harder, the social pressure to be interesting. Because trading doesn't exist in a vacuum. You watch other traders on social media. You see the highlight reels, the massive wins, the perfect entries, the dramatic comebacks, and your boring, consistent 2% monthly returns feel inadequate by comparison. Everyone else seems to be having these incredible trading experiences. They're catching runners. They're nailing reversals. They're posting screenshots of huge gains. And you're following your plan, taking your setups, managing your risk, and it looks pedestrian, unremarkable, not worth posting about. So you start feeling pressure to have something interesting to share. And that pressure can push you into the same sabotage behaviors we've been discussing. You take a larger position because you want a result worth posting. You deviate from your plan because your plan produces boring results, and boring doesn't get likes or comments or validation. But here's the thing. The traders posting the highlights aren't posting the full picture. You're seeing their winners, not their losers. You're seeing their best moments, not their average days. And when you compare your boring reality to their curated performance, you're making an unfair comparison that will drive you to self-sabotage. The most successful traders you've never heard of are the ones who aren't posting. They're not in the spotlight. They're just executing their boring systems day after day, quietly compounding wealth. No drama, no audience, no validation from strangers. Just consistent profitability that doesn't make for interesting content. You need to decide if you're trading for an audience or for yourself. If you're trading for an audience, you'll optimize for interesting. If you're trading for yourself, you'll optimize for effective. And those two things are almost always in conflict. Let's also address the physical experience of boredom in trading. Boredom isn't just a mental state. It's a physical sensation. Your body is used to the adrenaline, the cortisol, the dopamine spikes. When those disappear, your body notices. You might feel restless, fidgety, like you need to move, to do something, to create some kind of stimulation. Your body is literally experiencing withdrawal from the neurochemical cocktail that unprofitable trading was providing. And just like any withdrawal, it's uncomfortable. Your body wants its fix. This is why physical activity outside of trading is so crucial. You need to give your body an outlet for that restless energy. You need to create opportunities for legitimate adrenaline, exercise, sports, physical challenges. Not to burn off stress, but to satisfy your body's need for intensity in a way that doesn't destroy your trading account. When you feel that physical restlessness while trading, that's your cue to step away. Close the platform. Go for a walk. Do push-ups. Something that acknowledges and addresses the physical sensation without letting it drive you to take a bad trade. Your body will adjust. After weeks of boring trading, the restlessness decreases. Your nervous system recalibrates to the new baseline. But during the transition, you have to actively manage the physical discomfort of boredom instead of medicating it with market activity. Let's also address the identity component. When trading was exciting, it was part of who you were. You were a trader. That meant something. It felt important. It gave you identity. And when people asked what you do, saying, "I'm a trader," came with a certain cash, a certain implied excitement and risk and adventure. But when trading becomes boring, that identity feels less solid. What does it mean to be a trader if trading is just executing a checklist? What's interesting about that? The answer is nothing on a day-to-day experiential level. And that's hard to accept. You want trading to feel special because it validates your choice to pursue it. You want it to feel different from a normal job because that justifies the risk and the learning curve and the struggle. But profitable trading doesn't feel special most of the time. It feels ordinary, routine, boring. The only thing special about it is the results, and results take time to compound into something you can point to. You have to be willing to separate your identity from the emotional experience of trading. Your identity as a trader isn't about how trading feels. It's about what trading produces. It's about having the skill to extract money from the market consistently. That skill doesn't need to feel exciting to be valuable. Here's another angle, the opportunity cost of excitement. Every minute you spend trying to make trading interesting is a minute you're not spending on execution. Every bit of mental energy you dedicate to fighting the boredom is energy that's not available for discipline, for patience, for following your plan. When you stop fighting the boredom, you free up enormous amounts of mental energy. Energy that was previously consumed by the internal battle. Should I take this trade? Is this exciting enough? Am I missing something? Is suddenly available for other things. For improving your system. For learning new skills outside of trading. For building other areas of your life. The peace that comes from accepting boring trading isn't just nice to have. It's a competitive advantage. It's the difference between spending your mental energy fighting yourself and spending it on things that actually matter. Think about the downstream effects of not beating this boss. You stay on a hedonic treadmill. You need more excitement, which means more risk, which means bigger drawdowns, which means more emotional trading, which means the cycle continues. You never break free. You never get to the compounding phase. You're always starting over, always searching, always in the final stage, but never crossing through it. But the traders who beat this boss, they enter a completely different trajectory. They compound, not just money, but skill, confidence, and psychological stability. Each boring month of execution makes the next one easier. Each year of consistency makes the identity of boring, profitable trader more solid. The gap between them and traders still chasing excitement widens exponentially over time. 5 years from now, the difference between someone who learned to protect the boredom in the final stage and someone who kept seeking excitement is massive. Not just in account size, in every aspect of how they relate to trading. One is calm, confident, and consistently profitable. The other is still struggling, still searching, still stuck in that final stage, unable to cross through. So let's talk about what it actually feels like when you've won. When you've beaten the final boss and moved through the final stage into sustained profitability. It doesn't mean trading suddenly becomes exciting again. It means the absence of excitement stops bothering you. You sit down to trade and you feel nothing, and that's fine. You check your setups and there's nothing there, and that's fine. You execute a trade according to your plan, and it's completely mechanical, and that's fine. The fine isn't resignation, it's acceptance. It's peace with what profitable trading actually is. You stop checking social media to see what other traders are doing. You stop watching YouTube videos about new strategies. You stop reading trading books looking for the secret that will make it interesting again. Not because you're not interested in improvement, but because you've accepted that the improvement you need is in execution, not in finding something new. You start measuring your success by different metrics. Did I follow my plan today? Did I only take valid setups? Did I honor my risk rules? These become the questions that matter. The answer to "did I feel like a trader today?" stops being relevant. And gradually, over months and years, you realize something profound. You've built something valuable, something that produces income, something that works. And the fact that it's boring is exactly why it works. The boredom is the feature, not the bug. The boredom is the moat that keeps most traders from ever reaching profitability. Because most people can't tolerate it. Most people need the feeling. Most people will sabotage something that works if it doesn't feel like enough. And that means the traders who can sit in the boredom without breaking have an edge that has nothing to do with charts or indicators or market knowledge. They have a psychological edge. They have the ability to be unbothered by the absence of stimulation. That edge is rare. That edge is valuable. That edge is what separates the small percentage who make it from the large percentage who don't. And it's entirely within your control. The market doesn't determine whether you can tolerate boredom. Your choices determine it. Your decision, moment by moment, to protect the boredom instead of fighting it. So one more time, here's the core message. Boredom in trading is not a problem to solve. It's not a warning sign. It's not evidence that something's wrong. It's a signal that you're in the final stage before profitability. It means variance is shrinking. It means your edge is working. It means you've removed the chaos and the emotional interference and the self-sabotage that prevented consistency. Your job isn't to make it exciting. Your job is to protect the boredom. Guard it. Value it. Recognize it for what it is. The final stage, the environment where profits compound, the last test before you make it. When you feel the itch to deviate, to take marginal setups, to increase risk, to switch strategies, to do anything that makes trading feel more interesting, pause. Recognize the impulse. And then choose the boring option. Choose adherence to your plan. Choose mechanical execution. Choose consistency over excitement. The market is offering you a deal. Give up the excitement, and I'll give you consistency. Give up the adrenaline, and I'll give you growth. Give up the drama, and I'll give you an edge that compounds. Trade the feeling for the result. Most traders never take that deal. They want both. They want to feel like traders and be profitable. But the market doesn't work that way. You get one. So here's the real question. What did you come here for? Did you come to feel like a trader or to be one? Did you come for the rush or for the results? Did you come to tell stories about your wild trading adventures or to quietly build wealth over time? Because if you came for the feeling, you're going to keep resetting. You're going to keep starting over. You're going to keep searching for that next system, that next edge, that next something that makes it exciting again. And you'll never find it because the problem isn't the system. It's what you're asking the system to provide. But if you came for the results, if you came to actually do this, then you can win. You can beat the final boss. You can learn to be bored without breaking. You can protect the mechanical, unstimulating, profitable process you built and let time do its work. That's the final stage. That's what separates the traders who make it from the traders who don't. The market doesn't care how you feel. It rewards consistency. It rewards process. It rewards the ability to do the boring thing over and over without needing it to be interesting. So protect the boredom. It's telling you that you're in the final stage. It's telling you you're almost there. And if you can just let it be enough, you'll actually make it.